Hello, and thanks for joining AMA Insurance for an informative look at life insurance basics every physician should know. According to a recent survey, fewer than half of all Americans have life insurance. At the same time, research shows that 1 in 4 families would feel a financial impact within 1 month if an unexpected death occurred. With these facts in mind, we'll address some of your most important questions about life insurance, like: what are my life insurance choices? How much coverage do I need? Can I afford life insurance? Can and should I insure my family? What can I expect when I apply for a life insurance policy? Let's start with your choices. Life insurance plans can be broken down into 2 main categories: term and permanent. Term life insurance policies are generally straightforward. They are issued for defined periods, and they pay a benefit to your beneficiary or beneficiaries if you die within the designated term. There are variations within term insurance policies, and a common variation affects how premiums are charged. A popular choice is the level term life insurance policy, in which premiums remain the same throughout the defined level period, often 10, 15, or 20 years, providing consistent and easy-to-budget expenses. A step premium policy allows you to have premiums adjusted annually, so premiums early in the policy's life are generally lower and increase as age and risk grow. Permanent life insurance is a bit more complicated than term life insurance. There are 3 major permanent life insurance policy types: whole life insurance, universal life, and variable life insurance. All are designed to build cash value. The policyholder can access the cash value for living benefits while they are alive. For example, living benefits could be used to supplement retirement income, pay for expenses associated with long-term care, or in some instances to pay premiums. We'll look first at whole life insurance. Whole life insurance is designed to pay a guaranteed death benefit. These policies have a fixed premium schedule and as a result provide a guaranteed cash value amount. With universal life insurance, the policyholder is allowed the flexibility to adjust premium payments and death benefits at any time during the life of the policy. These policies tend to be complex, and the benefit amount and cash value can vary. Variable life insurance is a cash value life insurance policy with an investment component, making benefit payouts subject to the performance of underlying sub-accounts within the policy. These sub-accounts allow the policyholder to invest in things like stocks, bonds, and mutual funds. Variable life insurance policies can be more volatile than traditional life insurance policies as they reflect shifts, both positive and negative, in financial markets. You may have the opportunity to purchase life insurance through your employer. Employer-provided life insurance often resembles term insurance in its simplicity, but there is a key difference. Coverage is likely to end when you change jobs. You also need to consider that benefits from employer-provided life insurance may not be enough to cover your survivor's long-term needs. You may need to supplement an employer-provided policy to provide optimal protection for the people who depend on you. Life insurance offered through your professional association, on the other hand, comes with favorable group rates and will travel with you if you change employers. Next, let's explore an important question. How much life insurance will meet your loved one's real needs? Answers to that question generally range from 6 to 10 times your annual income, but your answer depends on your personal situation. How many people depend on you financially? How long will your dependents rely on your support? What are your current and anticipated financial obligations? What are your other resources? What are your goals? You may want to make sure a mortgage is paid off, your student loans are taken care of, and that your children's college educations will be covered. Life insurance can help your survivors handle future expenses. Nearly half, or 47% of millennials, 34 million adults, say they need or need more life insurance. For an estimate of your current need, you can itemize your expenses and your resources, including your spouse's or partner's contribution to the family income. The difference between the two will give you a starting point. For your most informed decision-making around life insurance, a consultation with a physician's insurance specialist will give you the benefit of their years of professional experience assessing the insurance needs of physicians. You may be surprised to learn that life insurance can be very affordable. Americans often overestimate the cost of life insurance by as much as 6 times the actual cost. A policy costing $165 a month was thought to cost $500 per month, over 3 times the annual cost. Almost half of millennials and a quarter of everyone else estimated the cost at $1,000 or more. Term life insurance is usually a very affordable option. It's especially so when purchased through a professional association. You may have the opportunity to customize your policy by adding riders, optional additions that provide extra benefits, usually at an extra cost. Availability of riders varies. You may also consider covering other members of your family, especially if your budget is based on more than one income. Discuss rates for insuring spouses and eligible children with your insurance specialist. Next, let's talk about the life insurance application process. Here's what to expect when you apply. First, be prepared to supply some basic information like Social Security number, driver's license number, specific information about your health, including the names and contact information of your physicians and a list of your prescription medications and dosages. Further health screening may be required, or it could be as simple as a few questions over the phone. Any in-person exams are usually done at the insurance company's expense. You will be asked to name a beneficiary, the person or group to receive the benefit amount in the event of your death during the policy term. This can be anyone you choose, including a church, a school, or a favored cause. The insurance carrier makes an underwriting decision on your application after it receives your complete information. What happens then? When the answer is yes, your policy will take effect upon approval of the carrier and premium payment. The policy will remain in force for the designated term as long as premiums are paid when due. If you have a level premium term policy, the premiums will not change during the designated level term of the policy. If you have a step premium policy, premiums will increase with age. What if my application is denied? Insurance companies review applications based on health history and other information you supply or permit them to acquire. In some cases, the company will decide not to offer a policy to an applicant. If this happens, you may consider policies with guaranteed acceptance and lower benefit amounts. Your physician's insurance specialist will go over your options with you. The time to act is now. Insurance rates are based on risk, and as you grow older, you will find that insurance becomes more expensive or even unavailable. By acting now, you can lock in optimum rates. If you have questions, contact one of our insurance specialists to learn more. Email team@amainsure.com or phone 888-627-5902. AMA Insurance, coverage for your financial well-being.